Welcome, accounting boffins. You are with Ashraf Patel. Accounting is the name of the game. Today's lesson, our focus is on inventory. Right. So, firstly, let me explain the word inventory to you. When we're talking about inventory, we're talking about stock, right? And your stock, when we're referring to stock, we're referring to the goods that we have purchased in order to resell at a profit. Because that's the idea of a trading business, to buy stock, to buy inventory, and then obviously you then resell that inventory in order to generate a profit. Okay, so have you thought about this here? How can a business, a retail business, do the following? Make sure that when customers come into their shop, that there are enough goods on the shelves. Just a question to whet your appetite. It is something that every business has to make sure that when a customer walks in, they do not walk out of that business without the goods that they have come in to buy. So you must ensure that at all times your business has the necessary stock on its shelves. Okay. Now, you get two types of stock systems, right? Up to now, you have been experiencing what we call the perpetual inventory system. In other words, this one here is one where you have identified the stock that you have on hand, and the word perpetual just means continuous. What is continuous? The continuity of the stock is recorded in our books. In other words, the method of stock that we are using is what we call the perpetual inventory, meaning continuous inventory. At any one time, if you need to know how much stock you have in your business, all that you do is you open up your trading stock account, right? You open up your trading stock account, right? And it gives you a balance. Let's take a simple example of 100, telling you that you have 100 Rand worth of stock in your business. Okay, 100 is an exaggerated figure, but it's just to give you an explanation. Right. Then you have the new method of stock, which we refer to as the periodic inventory system. Now remember, we are talking about stock systems. A business will either use a perpetual inventory system or it will use a periodic inventory system, depending on the needs. As you will see, as we go into the explanation, we will be talking about these two stock systems. Now, when we're talking about stock, remember, we said this is the stock that we have purchased from our suppliers to put into our business, to put onto our shelves, because that's the stock we want to sell. Now remember, part of internal control in any business is to safeguard the assets of the business. So therefore, you as an accounting candidate should keep this at the back of your mind, that you need to safeguard the asset. Which asset in question? Stock, inventory. What is the perpetual inventory system? Let's look at it. The movement of stock is recorded on an ongoing or a continuous basis. Do you see that? The movement of stock, that means stock coming into our business, stock going out of our business, that movement is recorded continuously, perpetually. That's why we refer to it as the perpetual inventory system. The exact quantities and types of stock items on hand are shown by the system at any point in time. At any point in time, if you need to know how much do you have of item A, all that you do is you go into the system, you click on the stock item, item A, and it will tell you this is the value, this is the quantity of item A that we have on hand, and this is the value of item A that is in our business, right? So remember, it is kept, you're keeping an updated and a continuous record of the movement of stock. 2, undertakings or businesses that are selling one type of commodity like furniture, cars, computers will make use of the perpetual stock method. Think about it, right? Items that are easily identifiable. Clearly you can see that if you walk in, you can identify furniture as unique items, you can identify cars or computers, and that will lend itself to this type of inventory system, namely the perpetual inventory system. How do we verify the value of stock on hand, right? And this is something you've been doing all the time. The physical stock taking is conducted to verify the stock on hand. In other words, if you want to know or if you want to verify that figure of stock that your records are showing, how do you verify it? By doing a physical stock count. Yes, it's all in good. You click onto the system and it says item A, 300 units on hand. However, anything could have happened during the year. There could have been pilferage. There could have been breakages. There could have been items becoming obsolete. So therefore, what we do is we do a physical inventory. That means we go in and we count item A. Item A count, that's the number of stock that we are, that's the quantity of stock or the number of units that we have on hand. Okay? So that is important. Now we come to the other stock system, namely the periodic inventory system. Look at the name. The name gives away what the system is all about. There is no continuous recording of the movement of trading stock. The value of the trading stock on hand cannot be worked out during the financial year. That means you're not keeping a record of the movement of stock, right? And therefore, in order to calculate the value of stock, it is done periodically at the end of your financial year. What is this? Which businesses use this? Obviously, it's used by businesses like supermarkets that sell large quantities of trading stock with low value. However, think about the technological changes in supermarkets as well, right? I want to draw your attention to a business like a spaza shop or a small vendor or a school tuck shop that doesn't have fancy hardware like computers and scanners. Those are the types of businesses that will be using what we call the periodic inventory system, right? In today's time, major supermarkets all use computer-generated equipment where they record their stock on computer. So obviously even they can use the perpetual inventory system, right? The value of your stock on hand at the financial year end is calculated by doing a physical stock taking. Obviously, year 2, in order to determine the value of stock at the end of the year, we do a physical stock take. So you can see there is common ground between perpetual inventory and periodic inventory, both of them dealing with the physical stock take at the end of your financial year. Okay, let's make a comparison now between the two systems. Here goes. When you're dealing with a periodic inventory system, stock purchases are recorded in the purchases account, which is regarded as an expense. Notice, when you buy stock, you record it in a purchases account, and that account is regarded as an expense account. Look at your perpetual system. Stock purchases are recorded in the trading stock account, and it is regarded as an asset account. A distinct comparison between the two, right? So, periodic purchases expense, perpetual stock account, trading stock account, asset account. Okay. When we're looking at the periodic system, carriage and purchases, customs duties are recorded directly in the carriage and purchases account or the customs duties account. So you have designated accounts to record the carriage and purchases, the customs. Each one has a unique and separate account, periodic inventory system. However, when you're dealing with the perpetual system, notice carriage and purchases, customs duties are all recorded in the trading stock account. In other words, you don't keep a separate account for these expenses on purchases. All of them go into one account, namely the trading stock account. So another distinct comparison between the periodic and the perpetual. Okay, let's look at this one here now. In the periodic system, the returns of stocks are credited in the purchases account. That means everything regarding the buying of goods comes into one account, namely the purchases account. Okay? So when you see periodic, immediately you know we're talking purchases account. So purchases, periodic. Okay. Then when we're dealing with the perpetual system, returns of stocks are credited in the trading stock account. Once again, accounting boffins out there, the moment you see periodic, your mind tells you, or you should know, I'm dealing with the purchases account. The moment you see perpetual inventory, you should know that you are dealing with the trading stock account. Okay, so those are two very important considerations when we're looking at periodic and perpetual. Still busy with our comparisons? Let's go to periodic. In the periodic system, when you have donations of stock, immediately you know that if the stock is being donated, yes, stock is leaving our business, donations is an expense account, we're going to debit donations. Where's the credit going to? The credit is going to my purchases account. Why? I'm dealing with a periodic inventory. By the same token, if I look at my perpetual system, remember, we said perpetual system, donations are credited in the trading stock account. So any movement of stock, when we're dealing with perpetual, it will be the trading stock account that is impacted. Any movement of stock with a periodic inventory, my purchases account is involved. Okay, you'll notice each of these transactions, we're separating them for you so that you have a clear indication of how to deal with it when you are doing an activity where everything is combined. Okay, the next one, we're looking at periodic drawings, purchases obviously, and if you're looking at perpetual, clearly you can see the trading stock is involved. Okay, with regards to the periodic inventory system, we know that any stock take is conducted periodically to determine the stock on hand. Whereas if you are dealing with your perpetual, the balance of your trading stock account is actually the stock account indicating to you that this is the value of stock on hand. It is verified by a physical stock take. Okay. With regards to periodic, you can clearly see there is no cost of sales account. Very, very important, right? You actually have to do a calculation to verify and to work out the cost of sales. Whereas if you are looking at the perpetual system, there is a cost of sales account. In other words, you're continuously keeping that cost of sales account updated. So, what have you seen in this segment? We've discussed with you the perpetual inventory system, what it entails, the periodic inventory system, what it entails, and we've actually done comparisons for you, so you have a clear indication of how these two systems operate in a business scenario. Right? You want to know more? Stay with us. See you just now.